Hi everyone, in today's video I'm going to answer if IBM stock is a buy. I'm going to use my simplified 6-step framework, so let's get right into it. The first step in my framework looks at customer value, and for IBM its revenue has been falling from 103 billion in 2012 to 57 billion in 2021. Of course, you have to keep in mind the company has made some divestitures, spin-offs, and it's made some acquisitions in that time. Still, holding over 50 billion in revenue shows that you're delivering something of value. Otherwise, customers wouldn't be spending 50 billion with you. IBM offers mainframe computing, cloud computing, consulting, and security services to large enterprises worldwide, and it holds a net promoter score of 45. The NPS measures customer loyalty, and if we look on the scale here, 45 is a great score. The next step in my framework looks at unit economics, and IBM's gross profit margins jumped from 46.4% in 2018 to 54.9% in 2021 as a result of some spin-offs and acquisitions. The company has repositioned itself and to focus on more profitable business. Meantime, the operating profit margin averaged 16.8% in the last decade, so excellent profit margins coming from IBM. The next step in my framework looks at the total addressable market, and in 2019, IBM's cognitive solutions business, which earned 22% of the company's overall revenue, that business alone is estimated to have a total addressable market over 1.1 trillion globally in 2022. That's not even counting the rest of its businesses, so a massive total addressable market opportunity for IBM. The next step looks at competition, and IBM competes with several large, deep pocketed rivals across its various business segments. For instance, it competes against Amazon, Alphabet, and Microsoft in the cloud computing segment, against other large, deep pocketed rivals in its other computing segments. But the advantage for IBM is that it has earned the trust of some large corporations after serving them for decades and decades, right? IBM has been around for a long time. Some of its rivals have not been around for that long. So relatively speaking, IBM has developed these relationships with these large corporations, and that can help it get its foot in the door, help it keep some business where it might otherwise lose business to lower priced rivals. The next step in my framework looks at valuation, and the stock is not cheap after going on a rally in 2022. It's one of the few tech stocks that have done relatively well in 2022, and that's caused IBM's, I'm looking at the price to free cash flow here in this chart, to go up from less than 8 in 2021. Now it's trading at a price to cash flow around 19, the highest level it has traded for according to this metric, going all the way back to before 2014. So the stock is not cheap here. And the final step in my framework looks at risks. And for IBM, enterprises are cutting spending on technology and software as fears of a recession are rising. This has been evident with several of the tech companies that I follow, all mentioning that they are experiencing slowing times to close deals as technology companies are, and all companies for that matter, have begun to tighten their belts, really starting to scrutinize every individual investment that the company undertakes. And then another risk I note here is that longer term it can be difficult for IBM to update its legacy business operations to more modern enterprise needs. It's a big business, it's hard to transition such a big business, and that could be a risk for IBM stock investors. All right, now that I've looked at each step in my framework, let's give IBM a grade here. For customer value, I gave IBM a B plus. Unit economics, they got an A minus here. You recall the excellent gross profit margins. Total addressable market, A plus here. Anything over $1 trillion is automatically an A plus. Competition, they get a B here. They've been around for a long time. They've proven they could win business and keep business. So for that, they get a B. On the flip side, the risks, they get a B minus here because it's been slow transitioning their legacy business over to the more modern enterprise needs, and also the fears of a near-term recession are troubling IBM's near-term business prospects. And then finally, valuation, they got a B because it's trading at the most expensive it has traded for going back before 2014. But on absolute terms of price to free cash flow, below 20 is not expensive in and of itself. It's just relatively speaking where the stock looks expensive. All right, now on the next slide, I will answer the question, is IBM stock a buy? IBM stock is not a buy right now. The near term headwinds from a potential recession and the pullback in enterprise spending, coupled with the most expensive valuation in IBM's recent past, going back to 2014, sways me to recommend investors to wait before buying IBM stock. I believe you're going to be able to get this stock at a better valuation in the next few months, or at least you're going to be able to buy this stock with lower risk, even if you pay the same valuation, if you wait 3 to 6 months for some of the consequences of a potential recession. We're going to get more visibility into those. So for now, if you're interested in buying IBM stock, put it on your watch list, wait for a pullback, or wait for some resolution, more visibility into how the business will do in the event of a recession. Okay, so that's all I've got for this video. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.